It's been a crazy year with real estate prices, but what are they going to do this fall? Keep watching. We're going to get into it. First, we need you guys to hit that like button and subscribe. And we want to hear from you guys. What do you think is going to happen to prices this fall? Do you think they're going to go up? Do you think they're going to go down? Do you think they're going to stay the same?
It's going to be exciting.
Yeah, so let us know if we want to hear what you guys think.
Depending if you're a buyer or seller though. It all depends.
Yeah, so true. So, Justin, what else are we getting into today?
Yeah, so let's just kind of talk about interest rates because, based on the price predictions of what's going to happen this October, November, December is very dependent on interest rates. So let's start with where they're at.
Okay.
6%.
Yeah.
They shot up from the low 5s. Now they're in the low 6s.
Yeah.
That is going to make prices come down 1 to 3%. In addition to what they've already come down at.
Wow.
Now, in Utah, they've come down 6% so far. That's an average for all price ranges in all areas.
Yeah.
If you live in Davis County, Ogden, Weber County, your prices have come down more. Mm-hmm. And then depending on what price range you are as well, whether it's a lower, a middle, or upper, those have variations in the different counties based on how much those have adjusted as well. But overall, kind of take that 6.5% price depreciation that we've experienced. And then if rates stay where they're at, you're going to add another 1 to 3% on top of that. So anywhere from 7 to 9% that you'll see. And that will hit sometime in November and December that you'll see that.
Interesting. So all in all, if rates continue to go up, what would you advise people to do? Is it a good time to buy? Is it a bad time to buy?
Right now you're going to wait. Okay.
Today, coming from a realtor, look at that.
Now's the time to wait.
Yeah, I agree.
However, if interest rates drop, that's going to be your sign. Or if you are in a situation where you can't wait, maybe you've already got your home sold, maybe your landlord's going to raise your rent by $500 a month and you just can't afford it anymore. And well, be smart.
Yeah.
Be smart about what you need to buy and negotiate. You had fantastic success negotiating some of your deals recently.
I did on my personal deal. So I just bought a house in Tennessee. And I got it for about 20% cheaper because I negotiated that price down. Because some sellers out there, a lot of sellers actually, are starting to panic. They're in that panic selling mode right now.
Buyers are panicking, right?
Yeah.
And they should because interest rates are high. Can I afford my payment? Is it going to crash?
Yeah.
First of all, it's not going to crash, okay? It's only correcting.
Yep.
But these same sellers are feeling that fear too.
Yeah.
And because of that fear, that's your guys' opportunity to negotiate a much lower price so that if prices do drop 3% like I'm suggesting, you're already going to be ahead of the curve and you're going to still have equity in the house because you negotiate it. It's hard to do, but it's very, very possible. Now, Michelle, what if rates go down to 5%?
Yeah.
What would the rest of the year look like?
Oh my goodness, my phone would be ringing off the hook most likely. A lot of buyers would come out of the woodwork because they could now, it would be more affordable for them.
Yeah. And so prices at that point, if they do go back down to the low 5s, they're not going to drop. Okay, they're not going to go up, but they're not going to drop. So we would probably stay around that 6.5% depreciation from the high of this year. Now, what if they go to 7?
Oh my goodness!
This is where it gets really interesting because, the Fed will meet again in November, and this last rate hike, even though it was not unexpected, how high rates went up were a little bit expected because we had kind of a break in August where rates did go into the low 5s, high 4s, and stuff started to do much, much better. But honestly, the jobs, they're looking at it, and even though the cost of goods have come down, the cost of gas has come down, I think there's a good chance we see rates in the high 6s come November.
Oh my goodness.
Maybe it hits 7, 20% chance it hits 7. But at that point, if prices drop 1 to 3% because of 6, then once it hits 7, they're going to drop anywhere from 5 to 6% total from that. So I guess we'd add another 2 to 3% on top of that. So what that looks like, you guys, is our peak was in April of 2022. And prices had gone up about 10% from January to April of 2022. Then we've lost 6%.
Yeah.
And now we're going to lose another 3.
Yeah.
And if rates go to 7, we'll lose another 5. So we'll end the year basically breaking even.
No appreciation.
By the end of this year. Yep. And or we'll maybe be negative 1% or plus 1%. Somewhere around there is what is to be expected. But you have to watch the interest rates. because we were shocked when they went in the 4s.
We were.
That's all it takes. If it gets into the 4s, and that's what the future looks like, and the Feds come out and said, hey, we're lowering rates and we've got inflation under control, and so we're going to keep lowering them over the next year or two.
Yeah.
What's that going to do if they get into the 4s? I mean, and stay there.
Yeah, I mean, we would see appreciation, and it would probably be quick. Maybe it wouldn't be as quick as what we saw in 2021, because, I mean, that was just insane. Unhealthy, insane.
Yeah.
We would see a much more healthy appreciation if it were in the 4s.
And so all these buyers that are out there talking about a crash, this is a correction. And if you're not careful and you're not watching the market like we are, once those rates hit a level and the buyers come back in, you're going to be sitting on the sidelines, and you should have been buying before everyone comes back into the market. Again, that's not today, right? Be patient, be smart, but it will hit that point. I'm telling you guys, we have a housing shortage. 3.8 million short in the United States and 30,000 short here in Utah. People need a place to live. And so when rates and the drop in prices meet up where that payment is more affordable, everyone's going to get back in to buy again because they need places. So please pay attention weekly, pay attention monthly, stay up to date with this stuff, because it's literally the difference of thousands upon thousands, tens of thousands of dollars in your guys' pocket, or not based on your pocket, based on who you're listening to.
Totally. As always, we'll give it to you guys straight. We're not going to sugarcoat it for you. We're telling you to hold off, coming from two realtors right here. So make sure you guys always tune in, though. Don't forget to like and subscribe, and we'll talk to you guys soon.